Hello everyone, how's it going? In this video, we're going to cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been very volatile as of late, with many titles having huge up and down swings, and the volatility of BBBY may be able to provide gains or losses for people who want to test their luck. So in this video, we will take a look at the stock from a technical and the fundamental perspectives, and to determine what could be a recommended action plan to carry out for BBBY. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. Currently, BBBY is trading around $2.64, marking a significant pullback from the previous momentums. Over the past 5 days, the stock price of BBBY decreased by more than 17%, and the previous momentum we had is now entering in a pause for the time being. Over the past month, the stock price increased by more than 7%, leading us to believe that we might be able to see BBBY testing the $6 price, and eventually even testing the $10 one. Obviously, this target is now put on pause with the current market dynamics. The stock will have to decide whether they want to continue on a bullish trend or to reverse back into sell-off mode. The current support level suggests that the stock may have a long way to fall, below which we would truly go for the bearish trend, unless, of course, the $2.50 psychological level is solid enough to hold the bears. From a historical perspective, it may seem as a great buying opportunity, but since BBBY operates without the assumption of going concern, I would recommend to be careful about the overall situation, while keeping in mind that the stock is currently enjoying upward momentum that may provide opportunities. Bed Bath & Beyond is a home goods retailer operating under the ticker symbol BBBY. It is founded back in 1971 and is headquartered in New Jersey, operating stores in the States, Canada, and Mexico. The company has a wide range of products at home, including bedding, bath towels, kitchen electrics, cookware, window treatments, storage items, and so on. They carry a lot of home decor, giftware, and housewares as well. The company operates both physical stores and e-commerce websites, giving the opportunity to shop on both platforms. One of the key strengths of BBBY is the strong brand recognition. The company has built a good reputation over time, offering great products and competitive prices, which has attracted a loyal customer base over time. So, another strength of the company is the diversified business model, in the sense that they sell a lot of different kinds of goods that are non-perishable to the customers. So, in some sense, I would say that this diversification helped the company to mitigate the risks and to generate stable revenue streams. BBBY is also successful in developing strong relationships with suppliers, which is very important for a retail business. So they have been able to secure those relationships with competitive prices, timely payments, and also being a reliable business partners to its suppliers. Now, with that being said, the company remains under significant sell-off pressure due to the company's specific and macroeconomic factors. The main reason people are interested in the stock might be because of the stock price itself or the volatilities from the stock market, rather than on the fundamental side. Because fundamentally, BBBY is a retailer with a lot of brick and mortars. This is something that you don't necessarily want to see in today's economics, given people's shopping behaviors. Over the past 5 years, BBBY's revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. This decline has been accompanied by a decline of earnings as well, as the company reported losses for several of its past 5 years. In terms of stock performance, BBBY's shares have been under pressure in recent years, having lost about 70% of their value since the peak of 2015, and since then underperformed compared to the overall market. It has also been facing increasing competition from e-commerce giants like Amazon, which has made it difficult for the company to maintain the market share and to drive additional sales growth. Also, the company has been struggling with declining sales in its physical stores and increased competition from the online retailers. To address this issue, the company has been focusing on store closures and cost cutting. They closed down many underperforming brick-and-mortar stores and are looking to reduce its workforce, closing distribution centers and consolidating the supply chain. So those measures are certainly good, but it's hard to say if they're enough. In fact, we're almost certain that they are not. Because despite those efforts, the company's financial performance has not really improved significantly over time, and in the most recent quarter, the company reported a decline in comparable sales, and the company's guidance for the next quarter can also be weak. So this is not the only issue facing the company. Those financial results are now affecting the company's assumption that it'll continue to exist. The current sharp decline in BBBY's price action is mainly caused by this concern, which also incidentally created a great amount of volatilities. More than 40% of BBBY's equity is owned by people that we can call institutional shareholders. In other words, they manage other people's money. The rest is owned by retail traders, people like you and I. This means that while the stock has a relatively high volatility, in theory, it's also a good stock to invest in for the long term, if there were no going concern issues. So, one key behavioral difference between institutional and retail shareholders is that institutionals can afford to wait and to play the long game, whereas the retail shareholders tend to trade in and out, believing that the more they trade, the more money they will make. This often results in a more volatile behavior as a shareholder. And another behavioral difference is that institutional shareholders are far more active in corporate governance, meaning when they have shares, they tend to vote on important decisions, whereas the retail shareholders very often don't bother doing so. In the current context, I would recommend not to invest in the stock certainly, but to mainly consider the stock for its trading opportunities. The reason I say this is because the fact that it has a large number of institutional investors could be misleading in our decision taking. One of the key catalysts that could explain retail interest in BBBY stock is also the short squeeze potential due to the significant short position against it. There are currently about 70 million shares been shorted off exchange, which is about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation against BBBY, which, by the way, makes sense fundamentally. The stock isn't doing well, and the business model is relatively ill-adapted to the real economy as we speak. Given the current situation, I would therefore recommend to wait for the current sell-off to end, while keeping in mind that BBBY has a fundamental uncertainty about its future, and that this may keep hovering around the stock for the foreseeable future. With that being said, the short-term volatility should provide enough opportunities for risk-tolerant traders, as long as the holding period is for the short-term swing trading and not for long-term. The maximum exposure I would therefore recommend would be within 1% of your portfolio, which should be spread over several weeks.